Have you ever looked at your bank account, then looked at how hard you work and felt like the math doesn't add up? You do everything right. You get the degree, you get the job, you show up on time, you pay your taxes, you try to save a little bit at the end of the month, and yet you feel like you are running on a treadmill that is slowly speeding up. The house you wanted 5 years ago is now twice the price. The grocery bill that used to be $100 is now $200. You are running faster, but the finish line is moving further away. You aren't crazy, you aren't imagining it, and most importantly, you aren't just unlucky. You are losing because you are playing a game where you don't know the rules. Most people think the money game is about working hard and saving cash. That is the version of the game they teach in school. That is the version your parents taught you. But that is the version designed for the pieces on the board, not the players moving them. There is a hidden system operating underneath the economy. It is a set of mechanics that dictates who gets rich and who stays poor. It is not random, it is an algorithm. And once you see the code, you cannot unsee it. My name is Peter Lewis. I don't care about motivating you. I don't care about making you feel good. I care about the physics of capital. Today, we are going to tear down the curtain. We are going to look at the source code of the financial system, how taxes, debt, inflation, and the banking system are actually engineered, and how you can stop being a victim of the game and start being a master of it. If you are ready to unplug from the matrix, turn off the distractions. Let's look at the machinery. The first rule of the hidden system is this: money is not wealth. This is where 90% of people lose the game on turn one. We are conditioned to believe that the green paper in your wallet or the digital number on your screen is the goal. We think, if I have more numbers, I am wealthier. But in the hidden system, currency is not a store of value. It is a tool of exchange. In fact, the system is specifically designed to punish those who hoard currency. Think about the last 50 years. If you buried $10,000 in your backyard in 1970 and you dug it up today, it is still $10,000. But what can it buy? In 1970, that money could buy a brand new house in many parts of the country. Today, it buys a used Honda. Did the house get more expensive? No, the house is just a pile of wood and bricks. It's the same house. The money got weaker. This is the first mechanic you must understand. The system is rigged against savers. The government and the central banks have a mandate to target inflation. They literally tell you, we want your money to lose 2% of its value every year, and usually the real number is much higher. Why? Because if money keeps its value, you would hoard it. You would stuff it in a mattress, and if you hoard it, the economy stops moving. So they design the money to melt. It is an ice cube. If you hold it in your hand, it disappears. This forces you to spend it or invest it. The people who stay poor are the ones who try to save the ice cubes. The people who get rich are the ones who trade the ice cubes for things that don't melt, assets. Now, let's talk about the rule book. Did you know there are actually two different tax codes in the United States? There aren't literally two books, but the way the law is written divides the population into two distinct classes, the producers and the consumers, or, as I prefer to call them, the laborers and the capitalists. Most of you watching this are operating under the rules for laborers. Here is the algorithm for a laborer. You earn money, you get taxed, you spend what is left. This is the W-2 trap. When you have a job, the government takes their cut before you even touch the money. You have zero control. You are an efficiency mechanism for the state. You work, they take, you survive on the scraps. Now, look at the algorithm for the capitalist, the business owner or investor. They earn money, they spend everything they need to run their life and business, they get taxed on what is left. Do you see the difference? It is subtle, but it is everything. The laborer is taxed on the gross. The capitalist is taxed on the net. Let's say you need a car. As an employee, you have to earn $40,000 to buy a $30,000 car because you have to pay $10,000 in taxes first. The car is bought with after-tax dollars. The business owner? He buys the car under the business name. He deducts it from his revenue. He lowers his taxable income.
He's effectively getting a 30% discount on his entire life, funded by the government. The hidden system is designed to incentivize production. The government knows it cannot create jobs or housing or food. Only entrepreneurs and investors can do that. So the tax code is a treasure map. It says, if you do what we want, if you build housing, if you start businesses, if you produce energy, we will let you keep your money. If you are just an employee, you are a cog, and cogs get taxed. The game is not about evading taxes. It is about changing your position on the board so that you are playing by the rules that offer the incentives. You have to move from the labor column to the capital column. This brings us to the most controversial mechanic in the game, debt. We are taught that debt is evil, debt is bad, cash is king. And for the average person, this is true. Consumer debt, credit cards, car loans for toys, financing vacations, is financial cancer. It is borrowing money from your future self to impress people you don't like today. But in the hidden system, debt is not a shackle, it is a weapon. The rich do not avoid debt, they love debt, but they use a different kind of debt. Let me explain the concept of shorting the dollar. When a real estate investor borrows $1 million to buy an apartment complex, they are doing something magical. They are locking in a debt amount in today's dollars. Remember what we said about inflation? The dollar is melting. It is losing value every year. So 10 years from now, that investor still owes $1 million. But due to inflation, that $1 million is worth far less in purchasing power. Meanwhile, the rents from the apartment complex have gone up with inflation. The value of the building has gone up with inflation. They are paying back the bank with cheaper, debased dollars, using income that has inflated. The bank is effectively subsidizing their wealth. This is why the rich get richer during high inflation, and the poor get crushed. The poor hold cash, which is losing value, and have variable rate debt, like credit cards, that gets more expensive. The rich hold assets, which are gaining value, and have fixed rate debt, like mortgages, that gets cheaper over time. This is the leverage mechanic. If you want to win the money game, you have to stop fearing debt and start understanding it. You need to learn the difference between destructive debt, which you pay for, and constructive debt, which someone else pays for. When you buy a rental property, the tenant pays the debt. You control the asset, you get the tax breaks, you get the appreciation, but the tenant takes the hit on the monthly payment. That is how you hack the system. Now, let's look at the physics of movement. In economics, there is a term called the velocity of money. The amateur thinks money is a static object. They want to accumulate a pile of it and sit on it like a dragon on gold. But money is energy. It has to flow. If energy stops flowing, it dissipates. The banks know this. Have you ever wondered how a bank works? You deposit $1,000 into your savings account. The bank pays you 0.5% interest. They smile and give you a lollipop. Then, an hour later, your neighbor walks in to borrow money for a car. The bank lends him your $1,000, but they charge him 7% interest. The bank is making the spread. They are making 6.5% on money that isn't even theirs. But it gets crazier. Because of fractional reserve banking, the bank is allowed to lend out that same $1,000 multiple times. They can lend out $900 to person A, $900 to person B, and so on. They create money out of thin air, backed by your deposit. The bank is playing the game of velocity. They never let money sit still. If you want to win, you have to become your own bank. You cannot let your capital sit dead in a savings account. That is lazy capital. You need to keep it moving. Income comes in, it flows into assets. Assets generate cash flow. Cash flow buys more assets. This is the flywheel effect. Most people have a linear financial life. Work, get paid, spend. End of line. The wealthy have a circular financial life. The money never leaves their ecosystem. It just cycles through, picking up more mass with every rotation. But here is the catch. The hidden system has a defense mechanism. It doesn't want you to know these things. It needs you to be a consumer. The entire economy relies on you buying things you don't need. The system spends billions of dollars a year hacking your dopamine receptors. Every advertisement, every notification on your phone, every trend on social media is designed to trigger a feeling of lack. They manufacture insecurity. You aren't cool enough unless you drive this car. You aren't successful unless you wear this watch. You aren't a good parent unless you take your kids to this resort. They are weaponizing your psychology against your wallet. This is the consumer matrix. When you buy a luxury item to signal status, you're essentially transferring your wealth to the shareholders of that luxury company. You're trading your freedom for a symbol of freedom. The moment you buy a new car, you lose 20% of the value. That wealth didn't disappear, it transferred. It went from you to the car company. You volunteered to be the loser in the transaction. Winning the game requires a psychological rewiring. You have to detach your self-worth from your possessions. You have to realize that true status is not what you wear, it is what you own. The CEO of the luxury brand doesn't wear the logos, he owns the stock. The richest people I know look homeless half the time. They drive 5-year-old trucks. Why? Because they're not trying to prove they have money. They know they have money. The person in the BMW is usually the one who is 2 paychecks away from bankruptcy, trying to convince the world and themselves that they made it. To win the hidden system, you must become producer-minded in a consumer world. You have to look at an iPhone and not think, I want that. You have to think, how does Apple make so much money? Should I buy the stock? You have to look at a crowded restaurant and not think, I want to eat there. You have to think, this place is a cash cow. Who owns the building? So, how do we put this all together? How do you actually escape the trap? You need to execute a class shift. You need to migrate from laborer to capitalist. And you don't need millions of dollars to start. You need a change in strategy. First, audit your position. Stop looking at your income. Income is vanity. Look at your net worth and your cash flow. Draw a line down a piece of paper. On the left, assets, things that put money in your pocket. On the right, liabilities, things that take money out of your pocket. Be honest. Your house is a liability. You live in it. It doesn't pay you. Your car is a liability. Your clothes are liabilities. Most people have a blank left column and a full right column. Your goal is to fill the left column. Second, buy your freedom. Don't rent your lifestyle. Every dollar you earn is a seed. You can eat the seed and spend it, or you can plant it and invest it. When you plant it, it grows into a tree. That tree produces fruit, dividends, rent, interest. The hidden system is won when you can live off the fruit without chopping down the tree. Before you buy the liability, you must buy the asset that pays for the liability. You want the Tesla? Fine. Don't buy it with your salary. Buy a duplex. Use the cash flow from the tenants to pay the lease on the Tesla. Now the Tesla is free. And when the lease is up, you still own the duplex. This is how the rich consume. They use assets to fund luxuries. The poor use sweat to fund luxuries. Third, play the tax game. Start a business, any business, a side hustle, consulting, selling on eBay. Why? Because it unlocks the tax toad. Suddenly, your cell phone bill is a business expense. Your internet is a business expense. Your home office is a deduction. A portion of your car is a deduction. You are legally moving your life from after-tax to pre-tax. You are stopping the leaks in your bucket. Fourth, understand the cycles. The economy moves in cycles: boom and bust, expansion and contraction. The hidden system uses recessions to transfer wealth. When the market crashes, the amateur panics and sells. The professional waits and buys. Recessions are when assets go on sale. If you understand that the system is rigged to inflate over the long term, you know that a crash is just a temporary discount. You have to have the stomach to run toward the fire when everyone else is running away. Here is the brutal truth. The system is not going to change. The government is not going to stop printing money. The taxes are not going to go down for employees. Inflation is not going away. You cannot change the wind, but you can adjust your sails. You've spent your whole life playing checkers, moving one square at a time, hoping not to get jumped. Meanwhile, the wealthy are playing 3D chess. They're using leverage, tax incentives, and asset accumulation to build fortresses that you cannot penetrate with hard work alone. Hard work is necessary, but it is not sufficient. You cannot dig your way out of a hole with a shovel if the hole is getting deeper by the second. You need a ladder. The ladder is financial literacy. The ladder is understanding the hidden system. It starts with a decision. Are you going to be a consumer, feeding the machine, or are you going to be a capitalist, owning the machine? Are you going to work for money, or are you going to make money work for you? The door is open. The code is right there in front of you, but you have to be the one to walk through it. Stop hoping for a raise. Stop hoping for a politician to save you. Take control of the mechanics. Learn the tax code. Buy assets. Use good debt. Ignore the noise. This is not a game of luck. It is a game of strategy. And now that you know the rules, you have no excuse to lose. I'm Peter Lewis. The class is dismissed. Now go build.